Hi, this is Sarah Merard, the Mortgage Mom. Welcome back to my channel. If you are new here, what you can expect is mortgage tips, home buying tips, some secrets from the industry, some things that you may or may not know about the home buying process. And also, I'm a mom, so I've got plenty of stories and things to share about my toddler. But then also, I could use, viewers' advice. I could use your guys' comments and questions and different things about motherhood and parenthood that we can all share in this together. So today I want to talk about renting versus buying. So we're in a market where people are kind of just sitting on their hands and they don't understand where the market is going, and so they just want to wait. And so I've seen and heard of people going and renting for a while. So, which is fine if that's in your financial situation, but let me just break it down with what the financial impact is with you renting versus buying. So I had a previous video about how to calculate your monthly mortgage payment, and we used a purchase price of $275. It's about average. And that is a monthly mortgage payment of $2,138. Okay. So first, let's talk about renting. So let's say your rent payment is $1,800 a month. Okay. And on average, the rent increases are about 4%. So using that math, the amount of rent, let's say in 5 years you're renting, you are going to give that property owner $116,992 in rent. That's a lot of money, especially in 5 years. What could you do with over $100,000 in 5 years, right? I wouldn't want to be paying someone else's mortgage. So let's switch to owning. So what does that look like? So with my previous video, please go check it out. But we're using the monthly payment of $2,138. And on average, and this is, on average, people spend about $900 a year on maintenance, different things to upkeep your home. So using that, on average, your home increases in value 5% per year, and that's average. It's been way higher lately, but let's just use a 5% average. And you're going to sell your house in, let's say, 5 years. So we want to look at how much equity you've put into that home minus what you would be paying in the seller fees to sell your home. So with a 5% annual appreciation, and then let's say an average of 6% in selling costs, in 5 years, you're actually going to have $80,196. I think that sounds a little better to have $80,000 in your pocket versus $116,000 in someone else's pocket. So I understand that people, are scared about buying and don't understand, what the interest rates look like. But I always just say, if you're ready to buy, let's look at buying. Because you're going to be in way better of a financial situation putting equity into your home versus putting equity into the property owner's home that you either live in an apartment complex or even a single family home renting from a homeowner. So follow me for more tips, hit the subscribe button, comment below, let me know your thoughts. But from a loan officer, it's always better to buy than rent. See you guys next time.